back to Alan Nookman. He's in Chicago. What do you think, Alan? Is this a trend or is this a bit of a correction, as we call it?
So far, it's 1 week. Let's remember, we made all-time forever highs in the S&P, the NASDAQ, and the Dow. Not Friday, but the Friday before. And it went straight down last week. It was a pullback, but it was a profit-taking pullback. We had some great earnings numbers. And if you look at the earnings right now, we're at the halfway mark. 50% of the S&P companies are reported. 75% have beat their earnings and 80% have beat revenue. That has not happened in a long, long time, since 2008. So from a fundamental standpoint, we needed some unwinding. That's what this is so far. So let's see how we stabilize this week. But net, you know, we were down 2% on Friday. The headline numbers were big because the numbers are so much bigger, but we really only lost 4% on the week. And if you look at the indexes, we're still up between 3 and 6% in those indexes in 2018.
Payrolls showed wages growing at their fastest rate, didn't they, on Friday? This is obviously something that President Trump desperately wants to see, but it adds to inflation. So are you concerned that these White House policies are a problem for the markets?
Well, looking at the bond market, that's really what's precipitated this decline. We saw Treasuries have a big sell-off in the last week or two. Now, we've seen rates move higher, but not that significantly. Last week, we moved 0.15%. So not a big bump, but it got everybody's to pay attention anyways. So inflation is going to happen. You know, we've been wanting inflation for a long time, and we've been wanting rates to move up for a long time. Now, rates are going to move up, and they're going to move up slowly. Even if we moved up a quarter point each quarter, it's still going to take us a couple years to get back to normalized interest rates. So I think the scare right now is a little bit more than the actual facts of rates moving higher.
And also, obviously you have a new Fed chairman coming in as well. I know he's a pretty well-known entity there, but you're not entirely sure which way he's going to go or how he's going to react to situations when he's in charge now.
Well, let's take a minute and reflect on where we were and look at the job that Miss Yellen had done. The markets have performed extremely well under her stewardship. So they're expecting this gentleman to kind of carry on the same. So we'll have to wait and see. But I don't think interest rates are a big issue right now. For me, it's all about earnings. And corporations are doing amazing. To look at the numbers last week, we had profit taking in Apple. Apple had the best all-time quarter in corporate history. They made $20 billion profit for the quarter. Then you saw some profit taking. Same kind of thing in Exxon. Exxon had a great quarter. They ended up making $20 billion profit for the year, the most profit they made since 2014 when oil prices were above $100 a barrel. So you're seeing money get taken off the table as these amazing numbers come in because the market's essentially gone straight up.
Okay. Alan Nookman in Chicago, appreciate your time. Thank you very much.